Yale. Yeah, yeah. There's an office I can use. Okay, well that's a good thing if my AirPods are in my house because I'm down here. That's not a problem. We are in a very good room. You have good sound for me, right?
You
Yeah.
sound great, Michelle.
Okay, great. Okay,
So,
so that's
Michelle, you and Rich met at a dinner at Cultura Manor years ago.
yeah, I think we did. How are you, Rich?
I'm excellent. Really nice to see you again.
Oh, likewise, likewise.
Hmm.
Well, I'm excited to be here. I have I was just thinking a little bit about the content. I think that you might find it interesting because some people have a lot of questions about what impact investing really is and what the delineation is. So I'm going to just start with like some basics and then talk a little bit about how Latin America is leading. And maybe, yesterday I taught a class to a group of Latin American students, and I was just, I got inspired to say, like it's also like about how do we both decolonize our minds about, who gets to manage capital, but at the same time extend out to work together with those who want to support this work too. Um, so I am ready to hopefully inspire, and if not just to be informative.
I'm sure it'll be lovely, whatever you say, and that's why we didn't need to rehearse or talk about anything. Um, and that's also why I wrote you that message yesterday that this group is got a different definition of investment and return and so forth. And so, this obviously isn't a financial uh, gathering. It's a spiritual gathering, an artistic gathering, a scientific, intellectual gathering. And um, there have been some amazing presenters, Owen Gaffney from uh, Nobel Institute and Per Stoknes, who you probably know, and some others. And so you're in an August line, which is great. And what was the one thing I was going to say about?
What an honor to join you. Thank you so much for this invitation.
Well, of all the things you've said no to, I'm so tickled that you said yes to this.
I could never say no fully to
Oh,
you, Chris. Just delay until the very last minute. So I appreciate the insistence.
Michelle, we have that in common with Chris.
Rich, would you like to tell Michelle the cadence of today?
Sure. Um, we'll kick off. These are friends that are coming in. Um, there's always a little chat. And then we try to be timely, but I think today we're going to probably kick off five after Chris. We'll see how that goes, however you're feeling. And Chris will start with a blessing over the call. So we'll start with a bit of a prayer, have everyone drop in. Um, we are recording this and we're AI recording it. So we'll have a meeting summary at the end, both, video and then Chris will do an introduction of you and we will, then you'll have as much time as you want, 45 minutes, an hour. You're with friends, everyone has their own style and flow, you can make it collaborative or everyone's super welcoming of new information. So however you feel comfortable delivering it. And then when you're done, um, we'll Chris will step back in, do a little quick appreciation and summary, and then we'll break out into and sharing our learnings. We'll do breakout groups, and usually try to do breakout groups of three people, and those three come in and start talking about, and then they share what they've been learning, asking questions, sharing what they pulled out of your conversation, and we'll be in that breakout group for Chris, I did it a little longer last time, 10 or 15 minutes,
Yeah.
and okay, I gotta find my timer. Super helpful. What I do with it. And then each of the people from those groups will share a summary of what that breakout group was. And then we'll and so a little conversation, and then Chris will do a closing at that.
Great. Sounds good. I can
So the whole
I'm
thing's
here
90
for both the
minutes.
beginning and the ending then.
Yeah.
Yes. Here's Andro from Colombia, I think it's from Medellin, possibly. Artist, lovely human, and Robin from Los Angeles. So these are the people that are showing up at 1 minute before. I love those people. Rich, do you think it's important to make an announcement about uh, a reminder to the audience? Well, what the thing I'm thinking about is in the past we've broken out. The idea was 2 minutes each at the breakout session, which is 6 minutes total, maybe with a little bit before, after 6.5. A lot of people
Right.
came back, never got a chance to talk. So we went to like 3 minutes each.
Right.
And, part of me, it's like I'd rather have people hungry to speak and not have time than sitting there staring at the screen, waiting for that egg timer to click over.
I think actually a little more structure going into the expectations of the breakouts and the purpose would be fantastic.
Okay.
Super helpful.
Yeah. So maybe I would love it if you would make that announcement. How do you feel about that?
Sure. Absolutely. Happy to do
Yeah.
it. Yeah.
Would you say no?
Yeah, I would absolutely say no if I didn't want to do it.
Okay. All right. And there's Isabella. Buenos dias, Isabella from Toronto.
Hello, hello,
Nice.
everyone.
Hi, good morning.
Yeah.
Red sweater. Um, and then Rich, what was I had one other thing to talk to you about was the breakout. Yeah, if you could also clarify to people that it's 2 to 3 minutes per person, give a chance for everyone to have voice, and then select a person to represent your triad
Right.
so that we don't fumble through, oh, who's going to speak for us?
DJ, good to see you, man.
Oh, whoa, my screen, there's way more people than my screen was showing me. I need to make an adjustment here. Okay. All right, cool. Nice. All right. What do you think, Ricardo? Do we have a quorum?
Quorum.
Look at that. Guijay's here. Joshua's here. Chris, Andro, Hannah's here. Nice. Guijay, Mary, Robin, Teal, Vicky. Nice. Oh, good. All right. Thank you all for being here on this last month of 2025. I don't know about you, but for me, this has been one of the most extraordinary, memorable years of my life. And I got a text from somebody the other day saying, "Come on, 26." So I don't know if any of you would be nodding your heads in agreement with that statement, but woo, it has been a wild ride and promises to continue. So I want to start today, as usual, with a brief meditation, and then we'll roll into my introduction and then our time with Michelle this morning. So again, thank you for making time out of your day, making time out of your Wednesday, and time out of your December, and investing in this way in your life. This morning, I was out with the dogs. Oh, actually, so let's start the meditation by putting yourself in that posture, putting yourself in that physical position where you're receptive to the inward turning of the moment we're about to share together. And with each breath, you feel that turning inward, inward, inward. And there's an intellectual knowing, there's a spiritual knowing, and there's an emotional knowing, a physical knowing. There's a clairvoyance that's available. And even though that we know it's there all the time, it is so easily forgotten, ignored, or denied. This place within me that resides in a central place of our being that was born before we were born is a place that is absolutely reliable, absolutely resonant with the vibrations of the universe, has full capacity to recognize the field, the dimensions. We are born of this universe. We do not live in it, we are of it. And what we need to know is always available to us. We have been tricked through an illusion to think that we need to keep adding to our lives, when in fact the pathway, often it's worth considering subtracting. As we add peace, as we add quiet, as we elevate our ability to use all of our senses to receive, the way we move through the world changes. And sometimes people will accuse us of moving with grace. And when that happens, it's an extraordinary revelation that, wow, my existence moves well outside the dimensions of my body. And I get to perceive the energy of others and they mine. Do my words match what's going on inside of me? I met a nun in Minnesota many years ago, and I asked her what the secret to life is. And she said, it's having the outside match the inside. And I looked at her, I said, really? That's the secret to life? She said, yep. Having the outside match the inside. So as I was walking this morning, I was thinking about Michelle, and I was thinking about today's message. And I imagine the idea that within all of us is something known as our song. And what a sad possibility it is that we may die with our song in us without it having been sung. So whether it is for you writing a book, playing an instrument, shooting an arrow from horseback, traveling to the land of your ancestors, whatever that song is that you know is there, what would it be like to invite it, or to be willing to invite it to come forward, so that you, through the support of us and others around you, share your song with the world and share your song in your life? I know I would love to hear your song. And that's the segue to my introduction with Michelle, because she strikes me as someone who has found her song and is singing it. I have watched her for years. I have watched her grow. I have watched her move from organization to organization. And I've watched her grace and her words and her way of expressing herself into the world just be absolutely musical to me. And when I was conjuring who would be speaking in future months, I thought, oh man, I got to get Michelle here. And so I wrote her, and now it's December 3rd, 2025. And in her very complex calendar, she has found a way to spend the morning with us. So I will take this moment to, I guess what I'll do is I'll pass it to Michelle, and then Michelle can say a little bit about what we're going to do today. And then Rich can talk about what the breakouts are going to look like probably when we do the breakout, right? Does that work, Rich? Okay. So we'll do the breakout in about 45 minutes, depending on Michelle's timing. So with that, greetings, Michelle. So lovely to be here with you this morning. Thank you for being here.
Thank you, everyone. And thank you, Chris, for this wonderful kickoff, because it really sets the tone for how, rather than what, I'm going to share with you today. I wish we had a little bit more time so I could hear each one of your voices, but as Chris said, I'm just gonna be content with just feeling your presence and just appearing gratitude for that presence that you're showing up with today. And a couple things occurred to me. So I'm going to talk to you today about what I do, impact investing. And usually the word investing just kind of like carries a different type of vibe, and people are like, ooh, we're going to talk about money and she's all suited up. I mean, I actually do have to give a more serious talk later today, or like a more businessy talk. But actually, I really am happy that I'm going to get to talk to you about what I do as a dimension of my own spirituality too. And I think that very few people get a chance to express their spirituality in terms of how capital is managed. So knowing that what I just said could be highly controversial, I'm going to ask you to hold that controversy for a moment. And then maybe what we will do is I'll talk a little bit about my own story, and then I'm going to share something that has been in my mind for the last few months, and over a more formal PowerPoint slide deck. I think I'm a very visual person, so I'd rather just have like pretty pictures rather than me talking at you. So maybe I'll start with this. So my story is a strange one because I am a fund manager for an impact investing fund. And if I just said that, I think that it would be less than 2% of my full story. I am originally a human rights lawyer, and I am from Ecuador. So I was born and raised in Ecuador. All of my family lives in Ecuador. My mom, my grandparents, all of my ancestors are from Ecuador. And if we were going to get super technical, according to my DNA 23andMe, I am 50% indigenous and 50% Southern European. So even, in a multi-generational dimension, I also carry with me this very strong sense of double belonging. And the first part of my career, I'm going to just like take a few leaps here. The first part of my career actually came because I had the wonderful opportunity to move out of my home, which was not a safe place for a young woman at that moment, to move to Canada to study for my undergrad with a full scholarship. And despite the very cold context there, I was 100% happy. I think I touched full happiness for my first time when I moved there because I had freedom to build who I can be. I felt that freedom despite being in New Brunswick, Canada. I saw no stopping me after I had a full chance to build my own destiny. And I decided, instead of being too pragmatic and maybe getting a job that will give me a very stable career and a stable job after this newfound freedom, I had this sense that this freedom wasn't about, being able to have my own bank account and savings, which is, of course, a part of it, but it was about going deeper. And I decided to study human rights. And through a number of twists of fate that included meeting my husband, who then got a Rhodes Scholarship to go to Oxford, who then encouraged me to apply to study at Oxford as well. I ended up becoming a human rights lawyer, a full-time human rights lawyer. And you would think, wow, like I've already made it at that point, right? And I was already breaking all of my ancestors' wildest dreams at that moment. And I knew that for me to honor this, I had to give back. And I moved back the first time to Ecuador for a couple of years because I knew that I could do something for the at that time. Then we're talking 2006. It was the worst part of the refugee crisis of Colombians coming to Ecuador. It was the closing up of the Plan Colombia. It was this military aid package that the United States funded Colombia to fight guerrilla movements, and the strategy was actually to push them over the borders to Venezuela and Ecuador. So I became not just a human rights lawyer, but I focused on refugee rights, and that led me to both build up the adjudication systems, the asylum adjudication systems in Ecuador, and then once I saw the government and the state structures strengthened, I knew enough that we needed civil society to keep us in check. So I started this organization together with a woman from California that actually had all this knowledge about starting asylum clinics to offer support, legal support for refugees trying to stay in Ecuador and not be deported back into a sure death, really. So long story short, in this one, giving direct services to refugees is brutal work, and I commend everyone who's ever done it. I still have horrible, terrible scars from probably the vicarious trauma that you can take on working with people who have gone through so much. And two, at that time, none of us had any support, psychological, emotional, or spiritual, or otherwise, about how to deal with what we were seeing. And two, my way of dealing with that was to just kind of like remove myself from direct services and just kind of think more systemically and more systemically and more systemically. And I ended up kind of like managing a broader system to offer these same very humane legal services at scale. And that led us to get funding to scale our work to other similar situations in Tanzania and Thailand. And this organization grew and became a global organization. And a few years later, I was already 30, living in Geneva, leading the programs for an international refugee rights organization. And at that point, I had already broken my ancestors' wildest dreams twice, right? And my own, really. That was the dream. And a couple of things happened then. One, I had a pup, I had a doggie that was my entire life. I loved caring for her. She was like the embodiment of innocence and kindness and sweetness and tenderness in my life. And she got cancer in Switzerland. And we're so thankful that there, of course, because it's Switzerland, I didn't know this existed. There was an oncology clinic for dogs there. So I spent a better part of a year caring for her, and giving her another year to live well. And it's so interesting, I don't really get to talk about my dog in terms of what I do, but this was so pivotal because I've already put myself at the service of others in different contexts professionally, but putting myself in the full service of a being who is most likely going to die anytime with such devotion made me rethink everything, made me think a little bit more about what was this deeper desire in my life. And that time, 15 years ago, I moved back to Ecuador, left my refugee rights work, did a very responsible leadership transition. Thankful that my husband also heard that calling so strongly. We left our jobs, sold everything, and moved back. And at that time, I had this idea that somebody had once said to me that impact is so important and tends to happen within the government and in civil society and nonprofits. But actually, we're not really using all the vehicles here, because the private sector is where the vast majority of capital moves, decisions move. And we're not really getting on that vehicle to do impact, and that somebody should start doing more of that. And there was all this idea of conscious businesses and impact businesses. So I said, fine, how hard can it really be? Start a business with no business background, and in a country like Ecuador. So clearly, I took that leap really hard. And then it's almost as soon as I landed back in Ecuador, people were like, lady, you're crazy. What are you talking about social businesses? That is impossible. Social businesses are a contradiction. Look around you. At that time, Ecuador, Latin America, very polarized. I think for those of you who live in the United States, understand polarization very clearly now. 15 years ago, that was it. You were left or right. You were one team or the other. People wouldn't talk to each other. Families would have fights over dinner, over where they stood. So thinking about social businesses was just kind of like short circuiting most people's entire framework. And for me to propose something like that and having that feedback made me feel extremely lonely and made me feel like it can't be possible that nobody else thinks there's a third way. Nobody else stands bravely in the middle, in the nuance, in the more complex context of doing both things or thinking that's even possible. So fast forward from that, I ended up building a business around that idea of loneliness, of thinking that if we create an ecosystem for people who, like me, thought that they could do good by doing business, right? Or do businesses that do good, just maybe we could be enough of us that we would form a new center, that we would pull from both sides of polarization and give young people a third way forward. And as crazy as of a business idea as it sounded, it worked. And actually, Chris met me in our very first iteration when we rented a what now I think is a very small, at that time it seemed enormous. I got 200 square meter space to create a co-working space for impact business leaders. And so that we could come together. And Chris met us there and saw us with these big dreams. And it grew. That business grew, and then we set up an entrepreneurship education business, an incubator accelerator program, and that grew. And then a social innovation consulting business, and that grew. And at one point, just we ended up having 45 people on staff and impact across the continent, and so many great ways to now give people evidence that social businesses were not only possible, but also tangible. I could offer examples every single day of people who dedicate their lives to doing this. And that's how I arrived then to impact investing. So, of course, a human rights lawyer, impact investing, I guess business leadership was already a stretch, but then going into investing in finance it felt a big leap. And I'm so thankful that I came across my co-founder, Justin Shorts, who allowed me to convince him to move to Ecuador to run our business accelerator, impact business accelerator, for 3 years. And then he's the one who said, hey, why don't we just start a fund? Let's do it. We're seeing all of these great businesses. Nobody's funding them. I'm going to tell you more about that context later. And it sounds like we just need to build our own solution. And the promise was strong enough that I decided to step down from being CEO of all of this holding of businesses that we had created so that I can dedicate myself full time to impact investing. So that's kind of where our story takes us. This is, this very personal side of a story that involves refugees, puppies with cancer, and a move back to Ecuador, building a co-working space, takes us to this moment. I am right now at Yale University finishing up a semester where I I have the great fortune of being a Yale World Fellow, which is a beautiful fellowship that allows us to come and think and be creative and also take a break in a way to think about our next big things. And it's given me a chance to really think about impact investment with critical eyes and also with creative eyes so that we can get to do more. So with that, I'm going to now share screen, if I'm allowed. I don't know if the hosts will allow me. I will send the request and tell you a little bit about some things that I have been thinking about how we can start redefining what impact investing is when it's done from the south to the south. So with that, I think I can now have permission, because I am screen sharing here. You're not seeing much. Oopsie. Okay, let me see. I'm gonna try it again, okay? Okay, good. Can you see? Yeah, can you see something that says reimagining capital? Yes? Great, thank you, Isabella. I'm going to now do a presentation. So can you see the presenter now? Yes, great. Okay, I got it. I'm gonna now minimize you. I may not see your faces for a little bit, so I'll need you to raise your hand for if you need to say something. So this is one of the things that I've been thinking about. It's just how Latin America can actually shape the future of impact investing. So before we really talk about that, I wanted to tell you a little bit about where where does like the idea of building our own impact investment fund in Ecuador came from, and it's actually very much illustrated by this dilemma. A lot of the social entrepreneurs that I meet and that we've been accompanying for a number of years in Latin America seem to have the same dilemma. So if they do really well, right, they end up having, high demand from regional retailers, right? Like they have a lot of demand for this. Let's see, Lucia's social enterprise maybe sells really high quality byproducts of quinoa that is sustainably sourced, organic, regenerative, and it sells. People want it, so she starts facing high demand. That tends to be successful, and the traditional financing options are unsuitable, right? So we have banks will require collateral. This is the saddest thing ever, because most of these social entrepreneurs tend to be self-made, and I guess what is self-made, but like tend to be first generation entrepreneurs. They don't really count on like their trust fund or their parents to fund their enterprise. And in some cases, their families are so supportive that they will even like, allow them to like, I don't know, mortgage the grandma's house to be able to access financing. And that's not right. Nobody should have that level of responsibility on their shoulders if you're taking a risk to do something good. And at the same time, nobody's grandma should lose their home if anything at all happens, because markets can be tricky. So yeah, collateral in banks, it's definitely a thing, and it's the first, like, it probably takes out 90% of the entrepreneurs I know. It just doesn't allow it. And then you have like VCs, famous VCs. Everyone is fed into the Silicon Valley mentality, because we all watch the same shows. We've seen the Steve Jobs, but like story and the biographical movie, and then we see the Silicon Valley Netflix show or whatever. I don't know if it's a Netflix show, but you know what I mean. So it really takes up our minds, and you think, oh wow, VC. I have a great idea. Somebody gives me a check, and then it just grows. And actually, most people don't understand that VC's demands of hypergrowth are super suitable only for very small numbers of business models that require either like software or something that is not very tangible to scale. And that, of course, leverages a lot of other markets to be able to scale. So with all of these pressures, right, payroll is due, harvesting windows are closing, currency shocks as well, increasing in input costs. She has an impossible choice. You actually either accept predatory cash advances, which drains your working capital in the midterm, or you turn down orders. You're like, sorry, I can't do this, right? And that's the saddest thing, because this woman's dreams of having a successful social enterprise are not being fulfilled, not because the product isn't good or because the impact isn't there. It's because they don't have access to the right type of capital, right? So an impact lender solution in this case would be to realize that there's something that works really well here. So in our case, we've recognized that there are some real cash flows, right? And there's proven demand and there's community involvement. So in our case, we structured our fund as a revenue-based loan, and I'm going to tell you a little bit more. So it's flexible, right? A loan that basically you pay as a percentage of your income or of your profit, depending on the seasons. And we could have like a supplier finance line, maybe backed by purchase orders. Um, and if we had, for example, some philanthropic capital that allowed us to reduce, like to reduce, for example, interest rates if they hit, say, certain impact goals related to, I don't know, quinoa farmers or deforestation-free sources or anything like that. So if we had all of these things happening, then capital actually can align with this cash flow and turn it into real impact. So let's take 3 steps back then. What is this thing called impact investing and why does it exist? So it actually comes from the big gap we're facing, right? So the estimated annual investment needed to meet the Sustainable Development Goals is about 3.9 trillion. And the funded that's still needed is 2.5 trillion, and it needs to be basically the burden needs to be shared among just I guess governments, usually think of governments and charities, but actually the vast majority of capital will come from high net worth individuals, institutional investors, and corporations. And that's, I think, the best reason I can think of for impact investment to exist, because it's a beautifully specific way to think about moving money with intention. So let me stop there for a second, because some people think impact investing is investing for no return, and I'm going to talk about that. Or some other people think, okay, it's kind of like if I moved my retirement savings to ESG accounts, and that's not it either. So ESG or ESG practices, which are great, tend to be for large corporations that are trying to minimize the negative impact their company has on the world. So you take a lot of measures to minimize the impact, minimize CO2, minimize the natural harm that their business model creates. Impact investing, actually, it's the opposite. It moves money to businesses that are built to solve social and environmental problems. And that's where we begin, right? We have the intentionality aspect of that. Then, of course, we have the measurability. So impact investing is very clear on what is it that you're measuring. So that way, when it almost like requires like this double accounting for each firm you invest in. The firm says, yes, we have sold, and this is our margins and all of these things that happen from the finance side. But then you have the beautiful measurements about how many lives you've really changed and there's a very specific catalog of indicators you can pick from to make sure that you have proper accounting of the measurable goals. And then, of course, there has to be additionality. The capital should fill market gaps or market failures, I should say. Why is this important? Because impact investing should not usually invest in things that the government should be doing, or things that have something to do with rights or democracy, right? Although there are some companies that will enable democracy or rights to happen, they're adjacent, but there shouldn't be, because you need to be able to sell something to somebody, and rights are not for sale, right? Then you shouldn't have that. So it has to have the additionality within the marketplace. And then, of course, have some financial return. And what do I mean by financial return? Actually, you could have negative returns, right? So I love this continuum. And I mean, forgive me if you've already seen this before, but I love this continuum because it's just a really great way to think about what impact investing really is. Impact investing is so many things. It's a big umbrella. And this umbrella is nuanced. So I'm going to make a few, let me see if you can see me. Okay, can you see me? Oops, sorry, maybe not. I'm going to try to, okay, I'm going to draw on this. So here we have a continuum of financial returns, and then we have social or environmental returns. If we were able to count, I don't know, CO2, tons of CO2 like not emitted or mitigated, and here, of course, financial returns in terms of dollars. So you have, first of all, high impact returns philanthropy, right? And philanthropy, let's assume that we can put the number zero here, $0, right? So from $0 all the way to minus a billion, let's say, minus, it's all philanthropy. So you give money, you get nothing in return, right? But then sometimes you could also give money away and then get 0.7 in return. Well, meaning you give away $1, but you get 70 cents on the dollar. So you kind of are losing 30 cents on every dollar. But the 70 that you get back, you could probably use to loan again. So those are, for example, like what we would call philanthropic or impact first loans. And then you can keep on going, because then the continuum continues to be very exciting, right? So within this space, and then here we can assume no externalities. And all the way here, you have all the ESG spaces, do no harm principles, and hopefully get to a no harm place for big corporations. And then within here, this beautiful kind of orange box, this is where impact investments exist, where you can actually count the positive impact that is happening. And at the same time, you have a whole continuum of how much financial return you actually have. And then within that, you can either have financial first impact investment funds, right? Or impact first impact investment funds. I hope this is clear up until now. So I'm going to stop, because I wanted to just make sure that I have this clarity. I mean, and for some of you, this might be, old news, but I want to make sure that I'm getting some nods, and this is not getting boring. I promise you, it's going to get better. Great. Okay, Chris, any comments there? Anything that you think I should clarify?
I mean, one of the things that the thread that I want is as opposed to talking to the group of us, each one of us is, to one degree or another, part of the commercial world. We're part of the spiritual world. We're part of the environmental world. And I think a lot of people feel completely disenfranchised from their way to participate, let alone contribute in these ways. And I know that every day you are adjusting the levers of structure, and most people barely have a finger on the scale. And the image I have is that scale has tilted in really the last 30 to 50 years so strongly into a narrow corner of the movement of capital. And that inevitably we need to put our finger on the other edge of it and tilt it back. And I see that as what you are doing, is you're starting to weight that broader consideration of the world that we live in, long-term viability, seventh generation, things like that. And so I would love to hear how anybody on this call, in this audience, and this is not a pitch for your organization, however, it's turning into one for me, that to realize that money isn't the problem, wealth isn't the problem. The problem is the scale has tipped so heavily in one way that it will collapse or whatever. And what you're doing is something that's going to mitigate that collapse and turn it into something where we participate in our own objective, optimistic way.
Hmm. I have a couple of thoughts there because what you're bringing up, I have two thoughts, right? And they're not my thoughts, it's just like perspectives that I've heard that are worth sharing here too. One of them is that it's important to accompany this beautiful continuum. I love charts, so I'm just like, God, this is art for me. So to accompany this beautiful continuum, be like, yeah, you can. I mean, this is like basically the takeaway from this chart is like you can have your cake and eat it too, right? If you find enough deals here, you can move money and make money by doing good. That is, I think, the biggest takeaway. And you're like, wow, this is incredible. This is amazing. I have to also just kind of like, first of all, say there is way more deals than money can cover still. So we still need more people here, a lot more people, okay, and money. But I think I say people because people is the ones that are behind this deciding. And at the same time, remember that this is far larger, right? And that most people have maybe, I don't know, 90% of their money here. And if they're experimenting, maybe they can put like 10 here, right? Or 90 and 5, and then they give away 5, that's how kind of like how they think of it.
Yeah.
But the important thing that to think about is writ large structurally, make no mistake. I am 100% clear that impact investment, it's almost like what I call like it's capitalism's, you know, loyal opposition, right? Because it mitigates the savagery of capitalism itself. Okay. So I'm not saying we should just think in this world and then stop thinking of better worlds. What I'm saying is there is an opportunity to make this less savage and actually better while we're on our way to a better system. And I think that's important because, like I said, I've spent the entire semester trying to be critical with what I do too and understand where do I stand? Does that mean I need to abandon it and maybe like, join a commune and start my own new system? And well, I could do some of that. I want to make sure that that I help those who are making their everyday small change every time, right? Anyone else? Okay, great,
Yeah,
great.
yeah. I am. Uh,
Okay.
so I've heard that. And thank you so far for this really amazing these ideas about how we can make a difference. I've heard that capitalism is the worst system in the world, next to every other system, and that one of the challenges that I think we face is that um, capitalism operates by this one algorithm, maximizing shareholder profit. What do you think about these ideas of like stakeholder capitalism, or like some evolution to this flower of capitalism that we have that can be uh, as you say, kind of ruthless? Is there a movement towards more like stakeholder capitalism? What do you think about those sort of ideas as they are pertain to your impact investments?
Oh, I love this. Okay, Dave, you're launching me into the next chapter. This is amazing. So I'm going to talk a little bit about that. And yes, agreed. Some would say that only within capitalism and in this like full freedom of ideas and experimentation could something like this, like impact investments, exist. So let's go forward with that. So um, because I took a bit longer to get to this point, I'm going to start going a little faster through this, but I hope that it just gives you a taste, okay? So here we go. One thing that I wanted to mention is that um, impact investment is a relatively young sector, about 20, 25 years, depending on where you actually place the original naming of it. And that there is an organization, the Global Impact Investment Network. It calculated that there's about $1.5 trillion in assets under management worldwide. which is good news. What I love is that this year they published this map. And yeah, we can notice that, it's actually an organizational representation of where the headquarters location is. So where are the top people that make decisions over impact investing, okay? So this is my slide to say impact investment is wonderful and is not perfect. And there's opportunities here to make it better. So what's the problem here? The vast majority of where the money or the money is held in headquarters whose location is either in Europe or North America, right? Most of the money in Europe is actually given away outside of Europe. In the United States, I don't know what the proportion is, but I don't know, let's say half and half states within North America and the rest goes abroad, most likely to Latin America. But it's headquartered up here, okay? And we have, of course, Latin America and the Caribbean. Look at this little thing. 1% of assets under management, and it includes Mexico. Okay, so this is my next thing. I'm from Ecuador. It's a very small country. Some investors would call it a flyover country, right? Because when investors think, oh, I'm investing in Latin America, they're thinking quite honestly about Brazil and Mexico. There's 19 other countries, 19 in between those two that get almost nothing of this investment, okay? So I wanted to show you this map also because there's two types of imbalances. There's, of course, the global imbalance, and then within this, there's the sub-regional imbalance as well. And yet here I am talking to you from, I'm not there right now, but coming from one of those small markets in Latin America where young people still want to do better and make a difference and yet have no capital. I want to leave you with that because I'm going to come back to it for a second. So how does one innovate with finance for impact? And here comes back the answer. First of all, we start thinking about changing structures. So let me go back for a second. When we talk about innovating finance for impact, that means innovating beyond the traditional VC model. Because popular culture makes us think that investment fund managers are those VCs that are like suited up and walk around New York or Silicon Valley and give away cash. That is one way to think about it. There is a very strong, large venture capital world within impact investors. And yet, that's the thing we're hoping to innovate upon, okay? So that leads me to the first way to change it or to innovate within it, change structures, right? The first one is investment structures. And here's where I have like this like unicorn and the zebra. There are no unicorns. Actually, there is one in Ecuador, but there are very few unicorns in smaller markets in Latin America. I'm not saying they couldn't be. What I'm saying is that what we have a lot of is zebra companies that have the two colors, that are rooted in community, that will most likely never want to do an exit or sell to a third party, that are intergenerational, good old style, wonderful companies, and that don't get access to financing structures that go with them. So I'm listing here a few more technical ways to invest in them that are not private equity, that are actually not venture capital, but different ways. You can also think about capital structures, right? So for example, there are countries where the context and the currency necessitate, like the spreadsheet will not give you any more, necessitate that you charge very high interest rates to make it viable. So this is where you have like blended stacks, where maybe we can find a foundation or a development bank or somebody who's interested in co-signing for these people and be like, you know what, I'm going to be your first loss guarantee. So I always try like to explain how a first loss guarantee works, is that if Chris came to me and said, hey, I don't have the money on me right now, I could have it if necessary, I'm going to sign for these entrepreneurs for $1 million. I will absorb the first $1 million of losses if you have any losses. Just that little paper that is signed, I could leverage 7 times. Or I could turn it, within the spreadsheet and turn it around and offer a better rate or a lower interest rate for these entrepreneurs that have no option. So this is the other way in which you can change structures. And then, of course, there's the legal and the ownership model. There are famous steward ownership, right? You can have purpose trusts where you don't have one particular owner, but actually there's a set of stewards that ensure that the purpose of the company beyond profits, it remains like the main mission of why the company exists. You can also have like cluster capitals, co-ops, member-owned, democratic structures. So that's one way you can change structures. You can also change incentives, right? Think about the fund managers. Think about people like me. At this point, I'm not really making much money, right? I'm actually always finding different ways to patch up my salary to make sure that our fund keeps going. But let's say we had a larger fund and I was compensated on market rate, or let's say I charge the 2% management fee for our impact investment fund. I would have no incentive to ensure that there's also impact, right? Because I get 2% and then a percentage of the carry, which is the success fee, basically the profits that come out in the end. And that means that I would be incentivized, even though I'm an impact investment fund, to maybe invest in companies that are maybe less impactful but more profitable, right? And that is where it gets tricky. So we can do impact link compensation, this third one. You could also do impact linked finance, right? So you can, I can find. I love this. I'll give you an example later. So, but just you can lower the rates or offer better conditions for founders that are doing good work, provided they meet some impact goals. Or you can have like outcomes-based contracts, right? So like things that are tied to results, payments tied to different results, and it shifts the risk to the funder rather than to the founders. So anyway, I can go back to it. And then, of course, you can also change strategies and processes and ask who is deciding, right? So when you're doing sourcing and due diligence, we can bring in peer or participatory review. So for example, if I was investing in indigenous enterprises, I would most definitely want to have indigenous founders as peers, or participation or community participation as part of the review of the due diligence to ensure that that there's decision making, that there's local language or gender lens sourcing. This is really important. The world exists in English, and yet 2% of Latin Americans speak English. We're leaving out 98% of people from participating fully. And then, of course, we have proximity-based risk assessments as well, which I can talk about later. Of course, there's governance, which this is not as innovative as I would think, so I'm not going to talk about it. But then also just think about how to think about investor exits in a different way, right? So if you were to buy a percentage of a company, that company doesn't really want to sell to Nestle or to Unilever. Some companies do. But if they didn't want to, you could think of, okay, how can we fund then a community buyback? How can we exit to ownership to the workers that have been building this company for so long, right? So anyway, so these are different ways to think about that. And I wanted to share a few made in Latin America case studies, because for me, proximity changes everything. And this goes back to that map that I was showing you. What the world we operate in means that the vast majority of my colleagues investing in Latin America do not live in Latin America. They might have an office there. They might send like a mid-level manager there, but the big decision makers and the big money tends to be outside of Latin America. So that's why I wanted to maybe like exaggerate a little bit. It's not like it's always like this, but just make these differentiations between parachute capital and proximate capital, right? So parachute capital tends to apply familiar frameworks. Familiar to whom? Familiar to those around you. So frameworks that apply in places like the United States, Canada, Europe. They definitely overlook local networks and collateral because they don't know them. They don't know about them or how valuable they are. They misjudge risk because there is an invisible context. So if you think of the Andean region, Colombia, Ecuador, Peru, Bolivia, how are we represented in Hollywood? Most often within the narco series, maybe. Sometimes they don't say the name of the country, but it's most likely Peru. Bolivia is this like exotic place that, just that has a lot of poverty. Ecuador in the news, a lot of uprisings. Who in the right mind sitting in Miami scrolling through their news would ever invest in these places? No one. It's because you're misjudging the risk. You are looking at it from a side. And of course, parachute capital extracts value and exits, right? Whereas if you think about it in proximate capital, you have rooted teams and deep market knowledge. You, of course, you're underwriting unseen potential from outside and you can build legitimacy and pipelines, right? In that sense, in creating more funds and fund manager and having more fund managers be based locally is creating an infrastructure for future growth, right? And that's where I come in. That's where I see myself as an Ecuadorian former human rights lawyer who had to, like, by force of need, become an impact investor. Why? Because I know that where I sit and the knowledge I have and the social capital that is in my brain, in my heart, in my spirit matters. Because without me, there would be no one to translate all of this beauty and opportunity to those people outside who would love to invest in Ecuador, but see it as something too risky. So with that, I want to show a few examples of other colleagues that are doing things from Latin America to Latin America. I'm going to be very quickly. So Viwala, for example, they're great colleagues in Mexico. They're doing flexible gender smart credit at scale. One of their funds, they actually have different flavors of funds. One of their funds is impact linked. So they actually adjust their interest rate according to different targets for their for the companies that they invest in. So with this women's credit line is particularly interesting because it gives the founders all the incentives to keep purpose at the center of their business. There's Impact of Capital, the fund that Justin and I co-founded, and so far we're almost done investing our first pilot fund. It was a $2.1 million fund, and I think we've done all right. We've invested in 8 companies so far. We have 4 more to go. 2 of them are about to be announced. We're operating across Ecuador, Peru, Bolivia, and Colombia. And we're living proof that proximity matters, right? We have collateral-free, revenue-linked loans that target. I call them SMEs, not because they're small, but because they are not your unicorn startup. So let's call it zero companies, right? And we invest in connectivity, circularity, education, food systems, and we also use gender lens investing. And what's really interesting is that so far we have 100% repayment rate, 100% on time payments, which, I mean, I expected maybe some defaults, but so far we're doing really well. And that's living proof that the financial side works. Now let's talk about the impact. So at this point we're probably higher now because we're about to do our end of year reporting. By the end of the last quarter, 340,000 lives have been impacted, 5,000 tons of CO2 mitigated, 320 jobs were created, and 51% of women beneficiaries. So we always disaggregate by gender. And that's not bad for $2.1 million, considering those $2.1 million are coming back. So that's one way of thinking about it. I'm happy to talk more a little bit about that. And then further down the line, there's Amazonia Impact Ventures. So they used to be not proximate, but I love to say that one of the founders saw the light and decided to move to Peru to fully deploy here. So that is Amazonia Impact Ventures. They invest in co-ops and associations that grow Amazonian products that are regenerative. They have specialized in doing these loans that tend to have a very high risk, and they have found catalytic capital, meaning like philanthropic capital that allows them to do impact linked rates. So for example, if I don't know, if an association of cacao growers can demonstrate certain levels of reforestation through agroforestry growth of cacao, then their interest rates drop. So it's a really exciting thing to share as well. And then of course there's Citaú further down the line in Brazil, where they started doing crowd lending channels to channel local capital to the Amazon. So again, going back to this proximity matters. They found that it was really hard to even get Brazilians in Sao Paulo to think about how to invest in Belém, and or in other cities in the Brazilian Amazon. So they decided to create this crowd lending platform so that people in Belém who see and understand risk in better ways can invest locally in different portfolio enterprises that drive regenerative economies. I'm not gonna talk too much about that. But what I wanted to end with is just more so like, this infrastructure exists, and the track record is being built. So now we need commitment to scale what Latin America has already proven works, right? So my main point here is that, as we're leading the way, we have decided to design the capital to fill real cash flow in real communities, and both thrive as a result. And in a really interesting way, it's not like we're fighting against the lack of capital. The capital is out there. We're fighting against a narrative around what investment is or what capital can do that is actually wrong. That is not fit for the right, like for the proximity that is needed here. And then with that, I just wanted to thank you for your time, and of course offer some opportunity for us to discuss, and thank you for letting me run through all of these really complex topics, but just to hopefully get the imagination and creative juices flowing about what else is possible with impact investment in Latin America. Thank you.
Thank you, Michelle. I think it's time for our breakout now. Is that right, Rich?
Breakout time, all set up, guys. So as a little bit of a reminder, Michelle, thank you so much. This resonates with me deeply and has opened up some new ways of thinking. And so the breakouts, just as a reminder, we're going to break out for 10 minutes. It'll be automated this time. The idea is that each will be breakouts of 3 people per room. And when you first land, I'd like you to point out who the leader of your room is, who's going to be sharing your shared wisdom, your sharing when we come back together. And the idea is you spend 2 or 3 minutes each sharing, your takeaways from Michelle's talk and the biggest ideas or question you have for her at the end. Any one of those things, all of it is allowed. And so with that, I'm going to punch the button. Any questions? Anything out there? It's one of my favorite parts. Let me just check. I think everything's set and we're good to go. Okay, I'll see you all in 10 minutes. With me? Joshua, it doesn't look like you went. Let me see if
Yeah, I'm trying to. I didn't get the prompt, so
let me see. Oh, I can assign you. I'm sending you in right now. I'm sending
okay.
you into Michelle's room. By the way,
Beauty.
good to see you, man.
You too. Thank you.
Al, you're back.
I was the only one in my breakout room.
Oh my gosh, man.
There was an Andro PC that
That was
was there for a
nowhere.
moment and then disappeared. And I got to hop off, so I wasn't. I'm incapable of being the leader of my own discussion with myself.
Well, hey,
Uh,
we could so let's do our thing. I mean,
yeah,
it's good to see you. And
yeah,
the okay, let's see. The what's really interesting to me about our thought and working at Patagonia and being in this space and like it's
right.
super like it's and I work at a small artist community up in Ojai that has a funny thing and this idea of my experience, and it's 20 years ago now, but my experience at Patagonia is a lot of that 1% money we put out in environmental groups had no impact. There was a high failure rate. Yeah,
Uh-huh.
all well intentioned. And the idea of putting a dollar into an impact company that you may only get a 70% return on, a 70-cent return on,
Right,
but that's over like 10 years or 20
right,
years or lifetime
right.
is is like super powerful to me. And I don't know why that was never clear to me, but
Hmm.
it is now. And I thought that was a great concept that just probably is maybe obvious to others, but is now obvious to me.
Yeah. The I'm sort of an impact micro investor, so I go through the crowdfunding portals and say, "Oh, that
Right.
sounds cool," you know,
Right.
and maybe 1 in 12 actually has ever kicked any money back out. So it's not. That's why it's impact investing.
Right.
Um, actually, so I'm involved in a really odd project, just through a buddy. I'm trying to help him out, but they are trying to build a campus around sustainable energy and agriculture in a small town in Alabama,
Oh,
and with a focus on agrivoltaics, which is doing solar above agriculture, and uh, because his family was from Union Springs, and at a family reunion, they said, "Okay, we have these 25 acres. We want to do a good guy project with it." So everybody turned in a proposal, uh, and so Herb said, "Well, let's do a solar campus. Let's train people, economic development and job training in the emerging economy." And they said, "That sounds like a wonderful idea. Go do it." Okay, so Herb is a documentary filmmaker in San Francisco. Clearly, the guy to do nonprofit real estate development in rural Alabama.
right.
And so I said, "Well, Herb, I can spin you up a website." And he immediately started introducing me as his CFO, because I was in business once. And I said, "Herb, I'm not the CFO." And he said, "Okay." And he introduces me as the interim CFO.
Oh,
So I took an online course on finance, just so I could understand what people were talking about. But I'm a spreadsheet wonk, so I can model shit out. But what it's turned out is that 5 of those acres is wetlands. So we've started to restore the wetlands, removed a bunch of invasive species, and we're trying to get trails and stuff for the local, middle schoolers and stuff. And I'm thinking, well, shit, I'm in the outdoor industry. I should know how you go about asking for people for money in the outdoor industry. And I realize I have no clue, and I go to the Patagonia website and they say, well, trail development is a no. And,
right.
job development's a no. So I'm trying to figure out who the person at Mountain Hardware is that gives away money now, not to ask them for money, but just to say, okay, like if I wanted to ask money for people, who do I ask? Right. It's kind of an entertaining problem. I'm going to have lunch, I think, with somebody at Mountain Hardware and
It is,
release.
it is, it's a whole other, universe within the universe that we occupied for so long, no doubt. And it has
Right.
its own language and its own set of knowledge um and it's tough. It's a tough world in my experience. And
Yeah.
I love the fact you're doing finance. Up at the art studio. I'm like the operations person because I'm the most
Uh huh.
organized and process oriented. And it's so crushing to me because I've never done, like, I was always the troublemaker everywhere I worked.
Yeah.
And now I'm like the responsible one, and I want to
Oh,
call all the old CFOs I work for and apologize to them for my behavior. Because I now understand. I now have a deep
yeah,
understanding
yeah.
of
So
what
I
they
was the
did.
ops guy at Mountain Hardware. So I was, while I was thinking of the three ways something's most likely to fuck up so I could head it off at the pass, I
Right.
was also bedeviling our CFO because, I'd turn in receipts once every 6 months and she'd go, you got to do better than that. So I'd go for 4 months. No, 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 no.
Well, it is quite a thing. And I find that those communities, and they're so, and now with AI and then the grant writing tools and the grant search tools that are just profound, that there's so much access to information now, it's hard to rise above all the other messages. Like how do
Right.
you
Yeah.
how do you have that message? Because there's so many beautiful kind of causes, there's so many beautiful impact opportunities out there. And and I think the context that I learned for Chris is that is everything has to be a balance of science, art, and spirit, like indigenous
Right.
knowledge, and like it's making sure you have that in your messaging. That it's because so many kind of lean one way or the other, and I find that I all these conversations I have in this community specifically help me um, balance those messages and have something that people can give them more to grab onto. You know.
Right. So
Um,
is this sort of an artist co-op you're working with, or what is your
It's a
organization?
jeweler that's an animal rescue, sustainable jewelry, and then impact like apparel import, and then selling other artist materials.
Wow.
And it's a little $5 million business. We have a catalog. Used to sell to Sundance before they went bankrupt,
Uh-huh.
uh, yeah, so it's about handcraft. Like our artisans are all in Ojai making jewelry. It's super chaotic. I mean, Al, there's like 14 dogs off leash in the studio. Like it's
How
insanity.
many people are in the studio? What's the
There's
ratio of dogs per person?
20 of, yeah, when we
Okay.
hire people, it's like, how are you with dogs? The first question.
Yeah.
It's like, if you don't pass that, it's not going to work. And I think we rescued there's 9 puppies on the property in addition to the 14 dogs, and then a total of like 50 animals on 5 acres. So
Wow.
and then we're trying to make jewelry, and like, well, we'll have a $20,000 necklace, and we'll be like, oh, there's hay in it. It's like, like we have to be careful. So anyway, well, man, it's that's gonna. So I usually don't participate in these because I'm managing. I think we're gonna get popped out in a minute, or in
Okay.
the warning's gonna hit. So my share is about this version of impact of giving money versus investing.
Mm-hmm.
And then and yours is really a share. Okay. If you
Mm-hmm.
step out, man, I'll share your story for sure. So thank
Okay.
you.
Yeah. Yeah, I gotta, and we drive back and forth to LA every once in a while. I might have to come
Oh,
wander
dude,
through Ojai and have lunch.
please. I would like nothing better. And then I'm living in Ventura. We're just downtown, so we're right off the highway.
Okay. Okay,
Um,
excellent.
dude, I would love to see you here and
Okay,
be fantastic.
good. Well, thanks for carrying us back to the main thing. And I do have to pop off. It's a crazy day,
It
uh,
is.
but great talking to you.
Yeah, good to catch up again, Alan. It's been a long
Okay.
time.
Hmm.
Gige, it's great to see you, man.
Okay. Bye for now.
Yeah, later. Gige, where are you right now? Oh, I
San
can't.
Francisco.
Oh yeah, Al's there. I got another friend on from that I know from Mexico.
Okay.
Okay, thank you. I can't hear you. Okay. And everybody's coming back.
All right. It looks like we are all back and we are all unmuted. Um, so uh, I'll not insert. I'll let Rich guide this next phase.
Wow, excellent. I just said goodbye to Al. He had to peel away. We had a lovely conversation. So the idea is here, I think Chris calls this harvest learnings. So this is sharing the learnings from everybody. And so I'm going to take my finger and point somewhere and ask someone to. In fact, I'll have a volunteer to share from a breakout that was dedicated someone to share those harvest learnings from a room. Does somebody want to step up?
I will. I was with Chris and Isabel, and I would say it was a pretty enlivened discussion about how can we find out more information to inspire other people that want to have an impact but don't know how, and how can we connect with some member of Michelle's team to engage, because we all have different connections, some in teaching, some in biology, some in social work, where we can inspire young kids and all the way up to investors. And there's enough inspiration in Michelle's talk to want to get engaged and move it further.
Beautiful. Thank you, Pat. Yeah, I'm thinking of a salt project, right, Pat? So I guess you do know.
I'm on it right now.
Okay, who's next?
I'll jump in.
Thank you, Dave.
I was with Alex and Andrew, and so our question really is like, how do where is the intersection between resources like venture capitalism and art? And how can we use art to awaken those resources to a different way? Like Alex was saying that, when he was in his zone, it was just like, like you're just focused on maximum exploitation and generating as much, profit as you can. And how do we don't have an answer for this question, but where is the intersection between beauty, art, and financial resources? Because there's enough resources out there in the world, and how do we get them pointed at places where they can be a contribution? And the other piece I want to add is that, like, could we get folks to start asking what is enough? Because I think we're in this maximum exploitation phase where we just don't have any clue what enough is. We play for abundance. Like greed is bad. We don't want greed. We've evolved to now play for abundance. But abundance is kind of the same thing. Like, what does it really mean? And so I think that the question is, what is enough? You, Michelle, took $2.1 million and had that incredible impact and got 100% return on all of that stuff. Like that, those little pieces are so exciting. It doesn't have to be $1 billion and, Warren Buffett and all of these giant initiatives. It's like, where is enough for something that to be expanded? So I don't know. I think I took 10 minutes to talk about our 10 minutes, but um, anyway, that was sort of the thing. And we don't have an answer to the question, where is the intersection between financial resources and artistic beauty?
Anyone else? Robin.
I'll go. Yeah, hi. So I was with Guichet and Chris.
Yeah.
Yeah, wow, what an awesome talk. The last thing you said is really the first thing I want to meet, and that's that one of the things that I'm hearing you say that would be valuable inside of your fund is having a narrative that reaches the people or reaches a wider swath, that you need a good story for, the current and next generation, so that money is not just the value litmus, but social impact is also a litmus for success, and communities thriving is also a measure of success. and so I think it's really interesting. I know this guy. He's like a really good storyteller. You might want to meet him. His name's Dave Zablosky. I think that I think there's potential. You know, I really, when I started this talk, I was like, well, I don't know where I fit inside of this, but I also now see that this wisdom network is because we are all have the ability to integrate, our gifts into supporting a larger vision of the future where all people rise. And I also thought of my daughter, who's for the first time earning something. She doesn't know how to participate because she knows, like, for her, capitalism bad. That's all she knows. Capitalism bad. Doesn't know where to put her money. Doesn't know how to invest her money. She's just told, put it in a Roth IRA. And I think that she, especially her generation, she just turned 25. They want to have impact. They want to know, that there is a way forward for them. And I think reaching a narrative that actually reaches that, across this generational divide, having them educated in a way that actually is future thinking, and it can be, they have so much social network stuff that goes out in small little story doses to shift the narrative. And I'm watching them do it in such a profound way. So this is one of the things I wanted to offer. The other thing is having a zebra company. What a blessing, as opposed to unicorn. We just went through 5 years of two of the partners wanting a unicorn, one of them wanting a zebra, and the end, it died because two people wanted a unicorn and one wanted a zebra. And that company is no longer. So what I want to see is value where generationally these companies thrive.
Beautiful.
Yeah. So,
Thank
and
you, Rob.
and I don't know, I may have missed some stuff. It was just so potent. We had a lot to say. So I don't want to take everyone's time up. Are we okay, Chris? Did I miss anything? Okay. And Quiche, with some thumbs up. Did I miss anything? Okay, great.
And then I'll just share for Al. I think for us, it was this concept that we've been swimming in this pool. And by the way, on the conversation, I'm looking at you, Alex. Alex was invaluable in helping me find a message for funding for an artist community trying to make an impact. And so this is something that's very fresh in this community. And but Al and I were talking about this obvious now, but the difference when people are trying to make an impact and they have money as their resource of giving it to a cause, it's 100% going to the cause, saving a river, protecting an open space, saving a species, versus investing in an impact company that may have a return over time, like, is a really powerful concept. And Michelle, it's your world, but to have that expressed in such a clear way is having an impact on me, and saying that I can make an impact, something like this investment could have an impact over 10 years, that a one-time event. And it was very powerful. So we both wanted to thank you deeply for that. I think that's it. So Chris, you want to take over now?
I want to give Michelle, we work to finish precisely on time, so we've got 7 minutes, but I'd like to give you really the floor to answer or respond to some of the comments that you've heard, and then we'll close at 30 minutes after the hour.
Okay. Well, I mean, I'm glad that that this conversation sparked some new thinking as well. Because, like, a couple things here. One is to bear in mind that that I spoke to you from this complete space of privilege of speaking English, privilege of having had opportunities that that open up my world in life, and also the privilege of being a bridge builder and a bridge for others. And then most of my colleagues don't have that same privilege, and they're so brilliant and so incredible and so capable, just can't speak English, and or don't have Chris as a friend, to introduce me to you, or their networks are not just there. To really think about ways in which you can also meet them in the middle. I'm sure they're trying to make an effort to meet people like you and to make networks and to build up a new idea for the new economy. And yet we have that. So those are the external factors that may block our way to building more bridges. And I guess there's also internal ones, right? Yesterday, when I was talking to this group of students from Colombia who were wondering if they could ever open an impact investment fund, I was just like, well, it also required a couple of ways to deconstruct my own mind about what a human rights lawyer is and does, and think about my life as service of a bigger cause, and sometimes the cause is not it, right? But also just about decolonizing my own mind and to stop thinking that we need to find, we need to meet and match the rules and financial structures of the capital holders from abroad to be able to have the impact that we need to have. We should be able to ask better from them. So those are the internal adjustments that I've had to make. And I would never ask you to also ask yourselves those questions if I hadn't asked them of myself. But yeah, how can we also decolonize our own minds about what can be expected, and about what can we really trust, and about how can we find ways for that trust to de-risk investments in our minds, and think of money as medicine rather than money as something that begets more money. So yeah, I hope that was useful, and thank you so much for your time.
Michelle, could I just ask you a quick question? When you say decolonize our own minds, would you mind just defining that as you see it for me?
I mean, I think it means different things for different people, by the way. It just depends on where you were raised, and even what TV shows you watched and read when you were little. Like in my mind, as I told you, like all I wanted in my entire life is to find freedom and leave Ecuador when I was 17. Like my entire childhood was built like that.
Mm.
And it took a lot of work to think of my own land and my own people as not as lesser, but rather misunderstood. Because I realized that I was looking at my own surroundings through the lens of those who see them as less. And that's what it meant for me. It could mean so many other things for so many other people, right? But it's just about what narrative do you ascribe to a scene of, young gang men in a periphery neighborhood of Colombia? And do you ascribe to that just violence and something that you want to shut down and like want to see it and I want to do business with them? Definitely. Or do you ascribe to that an opportunity to solve a problem, an underlying problem there, right? And that's what I mean by decolonizing. The colonization is a narrative. So, and we carry so many narratives in our lives, and it's just about thinking about which narratives serve you and which ones don't in this pathway to understand risk in better ways towards impact.
And I'm hearing that you get to choose which narrative.
Yeah.
Like you get to choose the one instead of participating in the one that was almost chosen for you.
Yeah, absolutely.
Thank you. I really appreciate that.
I hope that's helpful.
You're blessed.
So we're coming to the bottom of the hour. Obviously, I want to extend my big gratitude to Michelle for taking 90 minutes of her day to be with us. One of the things that occurred to me was at first I thought, oh, I hope her voice is reaching people, because nothing about IWN is an investment network. However, what it is expanding, punching my edges out into worlds of consideration and fields of of knowledge that I didn't previously occupy. And so from that standpoint, this was an absolute success because it was a framing of a bridge or an access point to a way of thinking that actually Lynn Twist embodies and knows very well. How to communicate with people in such a way that they will acknowledge the narrative around risk. And maybe, some of you were there going, well, I've got $100,000 in this, conventional fund because I'm kind of nervous and I can't afford to lose it. And then all of a sudden, Michelle speaks in a way that, there, I can make choices. I can change my story. I can contribute. I can participate. And I can take a role in my own well-being and read the annual report, not just for the spreadsheet and the profit at the end of the year, but the expanded definition of profit at the end of the year. So thank you all for taking the time out of your day today, for putting the time into your day today. I love seeing you all up there. I'm working from the IWN Los Angeles studio today, being hosted by Dave and Robin. And so with that, at 10:30, we will call it a day.
Bye, everyone. Thank you.
Thank you. Lovely to meet you all. Bye-bye.
Thank
Bye,
you.
y'all.